with you my top 5 alternative investments for, let's say, summer of 2024. I did a top 10 earlier in the year. There's been some movement, and these investments are things that I'm personally involved in, have personal information about. That's how I create my top 5, my top 10s. It may be different for other investors, and that's fine. I also want to just quickly review what's on the board behind me, because before I erase this, I was teaching earlier, and this is what was up there. Before I clean this off, I want to go through this. But first of all, if you don't know who I am, my name is Kent Leach. I'm an investor, but I'm also the creator of the Hickory Creek Smart Fund. And inside that customizable fund, I help high net worth investors, accredited investors, I help them access alternatives that they haven't previously been able to access. Things like mobile home parks, marinas, apartment buildings, oil and gas deals, private equity deals, kind of on a smaller scale, not like Wall Street does it. We're very small and nimble, and we can jump on deals very quickly and enjoy some really nice returns. So let's get back to the whiteboard. Again, if you don't know me, I love teaching on the whiteboard. Hopefully you can see it. I'm not a huge tech guy, but I just love this type of teaching. So really, there's 3 things. If you're new to alternatives, if you're just figuring out that your Wall Street investments aren't on track, and that's one of the questions I ask my investors: where do you think you're at? Because I'm approaching 50 years old, and I was doing some research. And if you're a 50-year-old, uh, Google or ChatGPT says that you need to have 6 times your salary, 6 times your income needs to be saved up in some vehicle. Most of us have been taught that vehicle is the 401k, maybe an IRA once you rolled out of that, and maybe you rolled it into a Roth IRA because someone told you that was the best thing to do for taxes. But it's amazing. We've been indoctrinated into Wall Street thinking. And 50 years ago, the 401k did not exist. Wall Street needed a boost, and the 401k was created to help the little guys like us get into Wall Street, but it also kind of took a chunk of our money and used it to fund Wall Street and grow it. And then the Treasury could take their share of the taxes after it was grown. So without your money, Wall Street might have struggled back then. And I'm sure some of you will argue with me on that, but I'm just not a Wall Street guy. If you're looking for stock picks and fun trades and things like that, this isn't the channel, the video. But if you're interested in tangible assets that you can drive by every day, I drive by assets that I want to own someday that I may probably never will own, because our assets are all over the place. It's where the best operators and sponsors are. But the first thing you got to do is learn what alternatives are. And I use the term alts, but learn what alts are. And a lot of people don't, they just think it's real estate. And it's so much more than that. And let me tell you, it's so much more than multifamily real estate. Multifamily has had a heyday over the last 10 years, and it has done well, and it's well deserved. Its reputation is well deserved. But what it did is it brought all kinds of new investors. I'd say the majority of your sponsors and syndicators in multifamily are young, kind of late, maybe I've seen some late 20s, early 30s. Those guys didn't live through the recession of 2008, the Great Recession. So they were in high school when that happened. So we're experiencing something similar, not on the same scale, but we're seeing interest rates put pressure on multifamily, and we're seeing a lot of those deals go sideways. So you need to understand alts, and the investment in alts is different. Some of them you invest in equity, some of them you're in debt, some of them you're in different parts of that deal. Development is different than value add, than stabilized assets. So you really have to just get this basic education, and I spend a lot of time with my investors getting that down, and I have a lot of videos that will help you with that as well. The next thing is, once you understand alts, you've got to go out and you got to find deal flow. And that sounds simple, but the truth is you need diversified deal flow across 8, 10, 12 asset classes. And in each asset class, you need to be talking to at least 3 to 5 operators or sponsors. So what does that mean? It means you don't just go on Facebook and find a deal and invest in it. You need to go find these sponsors either locally or nationwide. You've got to find them. You've got to look at their track record and see if they're even worth talking to. If they haven't gone full circle on a deal, that's probably a sign that you shouldn't invest with them. but there are so many things that you have to do to find deal flow. But again, 3 to 5 operators across 8, maybe 12 asset classes, you're talking about 70, 80, 90 relationships. Okay. And you just have to have that in order to have the next thing, which is due diligence and learning how to vet these deals. I'll be honest with you. I hate the numbers part of vetting deals. I just don't enjoy it at all. I don't enjoy that. So what I've done is I've partnered with other people who, some of them were engineers in their former careers. They love the numbers. Now I gravitate towards more sponsor due diligence. So I love looking into people's backgrounds. I love calling former investors that have invested with them to see how they were treated, almost like secret shopping with their investors. And then I just like getting to know those sponsors because those relationships bring me deals. And I love to get on the phone and negotiating better terms for my investors as well. Learning due diligence is probably even harder than finding deal flow because no one person can become an expert in underwriting apartment buildings, mobile home parks, marinas, all these different asset classes. It honestly takes a team, and that's something that's taken me years to assemble, not just a team, but friendships across the industry where we vet deals together. So honestly, the only thing that can solve this is that teamwork. And that's why I formed the Hickory Creek Smart Flex Fund. Really did it for my friends and family to join me legally, SEC regulated rules, so they could join me legally in investing in these types of assets. And we really just, it boils down to group investing. Okay. And let me give you a quick example of that. If you go to a syndicator of an apartment building, he's going to treat you like an individual investor with maybe $50,000. He's looking for hundreds of you, hundreds of people. We call you retail investors who have $50,000. He's going to give you a certain preferred rate of return. He's going to give you a certain rate of cash flow and then a split at the end. If I come as a group and we have $1 million check, I assimilate everybody's money into one check, we can get higher terms from him. Why? Because we made his job easier and we brought him one big check instead of 20 little checks. And I can also get better splits at the end. And that's how I derive income for the fund as well without ever diluting anybody's, actually improving everybody's economics. So this is really the way to invest. It's safer. It really mitigates risk. And like I say, it solves all 3 of these. So what I'm going to do is clean off the board here, but we're going to get to what this video is really about. And let me make sure I don't knock my board off the wall. Let's get this cleaned up and we'll get into my top 5 real quick. So top 5 asset classes for summer of 2024. Number 1 is going to surprise, maybe not surprise anybody. If you know me, this one has moved up because I'm starting to see concrete returns from an investment I made late last year. And this is oil and gas. Now, the oil and gas industry is one of the most volatile industries. It's a commodity. It goes up and down. Not only that, just imagine if rents traded like oil. If your rents were up and down, that's why people love multifamily, because for the most part, it's stable. What you're selling is stable. Oil and gas is volatile, but right now prices are really high, and there's lots of opportunities. There's lots of big operators who are drilling, and that's what you look for in oil and gas. I would not tell you, if you have never formed these relationships in the oil and gas industry, please don't just go find an operator and invest. That is not. Some of the biggest operators who spend the most money online are the ones you do not want to touch. It's taken time to form these relationships. I can show you my K1s, proof of my oil and gas investments in the last 6 months, and that's why I've got it number 1 right now. Number 2, I've got recent experience with this as well. I really like marinas, and you're going to say, marinas? Yeah, we're talking about boats, boat slips, boat lifts. We're talking about restaurants on the water. We're talking about selling gasoline on the water. We're talking about renting houseboats, renting boats, renting jet skis. We're talking about renting RV spots on the land. These things are cash cows. They have 8 to 10 different income sources. I've invested and took some investors into one earlier this year. We've not gotten our returns yet. We're still waiting because they're doing their value add program. Actually, they're just purchasing here in the next little bit, but they're going to do their value add program, and we think we've got a pre-engineered exit in 2 years, and we're going to 1.75 our money in 2 years, which is not bad. That's pro forma. We'll have to see how that goes. But these things have cash flow, especially during the summer. They cash flow like crazy. In the winter, they get a little bit slowed down, but that's still 50-60% of their income. Most people leave their boats in the slips all winter because they don't want to bring them back to the house. So marinas are my number two. I'm vetting deals right now. We are looking at land flipping. Land flipping, that's interesting. Everybody knows about house flipping, uh, and but land flipping is something that exists. This is rare. You don't find a lot of guys doing this, and when you find these guys, they usually are keeping it to themselves because they're making a killing. Here's simply, they mail thousands of letters every month to motivated land sellers, and they make offers, and they make lots of offers, and it's a game of numbers. If you mail 1,000 letters, you might get back 20 responses, and you might buy 3 or 4 pieces of land. That's what these guys do. They're buying land wholesale, selling it retail. They'll owner finance it. They will sell the note, and they'll do it again and do it again. And we have an opportunity to kind of partner with a land flipping group, help finance their growth, and I'm all over that because the returns are north of between 18 and 22% on land flipping. Very little debt, very little leverage. Debt's what's taking down a lot of multifamily deals right now. We want to avoid debt right now with rates where they're at. Land flipping is a good opportunity. Number four, I've been vetting this for about 6 or 8 months. We are looking at a short term rental opportunity, not just an individual property. This is a group who actually is trying to assemble 30, 40, 50 of these. They have a plan. They're not looking at little 1 and 2 bedrooms. Some of those aren't doing that well. They have a plan looking at luxury sized homes in desirable areas. These homes get rented because the whole group of bachelors can rent the house and can enjoy a cool backyard with a swimming pool, pickleball, putt putt, all kinds of cool stuff they do in these backyards. They have this down. They've got it figured out. And if they have all kinds of exits, they can sell the home off individually. Their dream exit is to private equity, who would buy all 40 homes and the cash flow they create. But short-term rentals, I've got one that's coming up, and I'll probably bring that to my investors sometime this year. Number five, and last but not least, right now I just still think mobile home parks. Okay. Now, if you were me 5-10 years ago, mobile home parks would have been right up here with marinas. Marinas are the new mobile home parks. But mobile home parks still have a lot of opportunity, not just to buy them and sit on them, but these things, some of these are sitting at 20, 30, 40% vacancy. And when I mean vacant, I mean there is no longer a home on that lot. So what the best mobile home park deals and operators, they jump into some really hairy deals where they've got half vacant, and they have to capitalize and go buy either used or brand new homes. They'll cut a deal with somebody like Clayton Mobile Homes, and Clayton will ship them 2 homes a month for 24 months and fill up 48 vacancies. And then they'll owner finance those homes, or they'll help those people get into those homes, or and so they create another stream of income. These things can become cash cows as well. But you never want to rent mobile homes. You really want to create a dirt rental. That's the mobile home park. Then you want to have another layer with home finance. But you really want to stay away from rental mobile home parks. So that's it. That's my top 5 for summer 2024. I'll do another one of these in the fall because there's always movement, and I'm always out there talking to operators, seeing what's going on. I'm going to simplify this because having a top 10 is kind of hard, but having 5 assets to be looking at. So what you need to think about is, hey, would I be interested in owning a marina or whatever? Let me tell you, I didn't even touch on the oil and gas. Why I did this deal? Huge tax write off. Okay, and I can go into that in detail. I actually have a video I could send you on that, but look at these. This is America. This is what people do. These are small businesses all across America that are running. This is what we are fueled on, not necessarily Wall Street. Okay, so you know, you do what you want to do, but I think every individual needs to have at least 30% in real estate, 30% in private equity opportunities, 30% in some debt stuff, and then the 10% in cash. And that comes um, from studies that I've done looking at ultra high wealth, high net worth people and where they're putting their money. So hope you like this video. Hope it gives you some ideas about alternatives and what's hot right now. Again, this is my top 5. There's probably plenty of people out there who don't agree with me and would not invest in some of these assets. But I feel comfortable, and I put my money alongside my investors, and we do well. So hey, go out and have a great day today. Hope this helped you.